Well, ladies and gentlemen, after a motivating beginning to the day, we now move to our much awaited first panel discussion of day two, investing in climate tech startups, the learnings so far. As the world moves towards net zero emission future by 2050, it is imperative for us to pause, reflect, and incorporate learnings from investments made in climate tech so far. This session will revisit some of the defining climate tech investment experiences in India and the learnings. Yet again, I take immense pleasure in introducing our esteemed panelists for the day. Jasheet Mangat, partner Gigaton Capital. Gigaton Capital is a venture capital focus on breakthrough climate critical technologies with Gigaton scale abatement potential or comparable ecosystem benefit to resources strained by climate change. Karthik Chandrasekhar, partner, Sangam Ventures. Sangam Ventures is a seed and early stage venture fund that invests to improve access to sustainable energy and resource productivity solutions for the underserved in India that can lead to inclusive development and creation of communities that are resilient to climate change. Padmaja Ruparel, co-founder India Angel Network. It's a group of primarily Indian angel networks funding early stage startups. The group has over 450 members from 11 countries. Satya Bansal, founder of Blue Ashwa Capital. They are an investment firm that is backing sustainable and long-term profitable businesses which are solving real challenges and building lasting value in core sectors. Shyam Menon, co-founder and partner, Bharat Innovation Fund. Bharat Innovation Fund are an early stage venture fund with a mission to invest in IP-driven Indian startups, creating breakthrough healthcare, agriculture, renewables, and advanced technology innovation. And finally, our moderator for the day, Anuriti Tandon, engagement manager with Arete Advisors. Arete is a boutique consulting firm founded out of passion to contribute to India's economic landscape by delivering high quality advice and implementation support to clients, offering comprehensive advisory services across strategy, business planning, market assessment, commercial due diligence, organization structure and development, and other performance improvement support. On that note, I hand it over to you, Arunati. You're on mute, Anurati.
Of course. Thank you so much, Neha, for that introduction, and a very warm welcome to all the people who've decided to spend Friday evening with us. My name is Anurati. I'm an engagement manager with Arete Advisors. We're a management and impact advisory firm. It's been a real pleasure spending the last few months with Climate Collective and the Impact Investors Council, working on the investment landscape report. I think everyone in the audience really understands the critical nature of climate action today, but the report gave us a new dimension and new ways of looking at climate action through the lens of startups. The panel with us today has a really deep and multifaceted understanding of the space. And so without further ado, I'd like to dive into the discussion. We've structured the next hour or so in 3 slots. We'll spend 20 minutes or so on opening remarks with the panel. And we'll structure this in what we call, I used to think and now I think, where we'll request the panelists to really reflect on their journey and their learnings in the climate tech space and help the audience better understand the real texture and depth of this work. The next sub-session will be on patient capital. This is something we've heard across the board from investors, entrepreneurs, and so on. And the third and final sub-session will be on their wish list for the ecosystem. So without further ado, let's get started, and I will hand over to Jasjeet.
Thank you very much. It's a pleasure to be a part of this panel. And what I used to think and where things right now, a number of us in the field have been waiting for a day like this where climate and specifically climate tech would be an integral part of the investment ecosystem here in India. It would transcend to the importance that climate change is globally So I'm very glad to see that that has actually come about now. There are folks out here on this panel that have been colleagues and members of the ecosystem for well over a decade. Investing in climate tech has been a specialized labor of love for many of us. And it's terrific now to see that the challenge that we face is now being met by opportunities being mobilized, financing being mobilized, and most importantly, the cohort of entrepreneurs being mobilized to come solve this problem, not just for India, but solutions that work in India work globally as well. So it's terrific to be on this panel and to see the maturation of this field to the point that we have a panel like this here today.
Thanks. Thank you so much, Jasdeep. I think you're right. I think we have come a long way and there's further to go. Karthik, would love to actually hear from you on this as well and maybe reflect on this journey for you and how it started and where you're at now.
Sure. It started as an energy access fund in partnership with the Shell Foundation, and then evolved into looking at climate change just because felt that the need to kind of create holistic solutions just required us to kind of think more from a long-term society kind of climate perspective. And I think in terms of where we are today, we started as a fund. We started doing acceleration programs just because of all the work we did before we invested and tried to structure it into something that kind of helps us be more efficient with our resources. And then now we also have an incubator with Niti Aayog that we run apart from the fund, and I'm in the middle of a fundraise. But I think in terms of where I was and maybe what's changed in terms of perspective, I think for myself, entrepreneurship, you always are thinking from the bottom up, first principles, kind of looking at the problem and then looking to work with your startups around pathways to commercialization, looking at kind of area solving for a business model or a problem the customer has or a job to be done, right? So that's, to me, has always been how we have operated, and all our investors who do innovation investing understand it, right? But I think what I've learned over the last year is when you look at climate change and the fact that the problems are huge, the actors who want to kind of come and play in it are like supranationals, right? So you've got the Green Climate Fund, or you've got the large institutional investors, and they have a more of a top-down approach, right? Like, how can I deploy $1 billion today, right? And so when you kind of take that top-down approach, and then you are kind of doing these early-stage innovation and doing that bottom-up approach, first principles approach, how do you kind of bring those two together? And so what we have been spending time on is to kind of think now from our investors' perspective on how do you kind of convince them that if you want to create something disruptive, you got to start from the ground up, and kind of the disruptors that will come are not the ones who are going to convince to set up a gigaton manufacturing plant tomorrow through a PLI scheme, but somebody who's going to come up with a new technology, who's going to convince investors over time to kind of set up your gigaton factory like a Tesla did, right? And it's going to be pretty risky and going to have a lot of chances of failure as you go along. And I think that risk appetite is what we would love to kind of spend time building, but give all our investors hope that the opportunity to create disruptive impact is very high, even though you start small or early stage.
Thank you, Karthik. That's really interesting, and I think it's so telling for the state of the sector, right? That it's now time to kind of really merge the top-down narrative with the on-ground realities, and there's a lot of work for us all to do in that. Satya, can I go to you next, please? Would actually love for you to reflect on the same question and talk about what you used to think and where you are now.
So I think first and foremost, thanks for this great session. I'm glad that we are reaching to a tipping point where climate tech is becoming mainstream. I think most of us, at least a decade back, were thinking climate change more of a government issue, and it was supposed to be addressed by the government. And we used to think that this is more of an impact capital or philanthropic capital, which has to support the public sector to finally address it. Climate tech investing is now becoming more of a mainstream investing, and I won't be surprised if we see next set of billionaires coming from this world of what I call environmental tech, green and sustainable tech, whatever name you call it. I think there's going to be a significant amount of wealth creation going to happen in this. So while we are addressing most of the sectors which are related to impact space, but we are still call ourselves as a mainstream investor seeking mainstream returns for our investors. And this is very much possible and real now. So this is the first and the significant change that we have noted. The second, I take this point from what Karthik just now mentioned, that the top-down and bottom-up approach is becoming, we need to somehow bring these two together. There is a significant gap between what is being discussed in the lab and what the market really needs it. So I think there is a good amount of work to be done by taking some of these innovation from lab to market. And this requires a very more of an ecosystem approach where we bring the capital, the technology, and the market linkages together to make it really happen. There is a significant amount of capital available to be invested in climate tech space. At the same time, there are not many, you can say, convincing enterprises which can seek this size of capital. And this can be bridged by bringing the two together, by building more of an ecosystem at the bottom-up approach, as Karthik mentioned, and then connecting the dots together. I'm happy to share our experiences as we started working in this in the last couple of years specifically.
Thank you, Satya. And I know we'll get to some of these as the session unfolds. I think what you said was very, very powerful around that the narrative in some ways has shifted, but the mechanics of that need to figure out. So the technology, how to scale, how to market link. So all of those. Shyam, can I go to you next, please?
Sure. I mean, so in our case, we started with a seed fund called Infuse Ventures, which focused on quite early stage investments in the climate tech world. It was an interesting experience. There were not many follow-on VCs, so the journey was difficult for most of the startups, but few of them made it big, which was good to see. They managed on their own, completely on their own capabilities with very little external equity. If you ask me what has changed now, I mean, so we did Infuse in climate, then we moved to deep tech. We've got a deep tech fund. We also have a fintech fund. So now there's a little over $100 million we are managing across multiple vehicles. We've started looking at climate again. We've got inbound interest from some of the LPs that we're working with, and we are exploring it again. But again, so we landscaped what has been changing. It still continues to be difficult for the early stage entrepreneurs in climate tech to raise capital. That pre-series A, series A, series B is still quite lacking. But there are sectors where the potential of follow-on capital is available, because the follow-on investors may or may not care necessarily for the climate thesis, but they're in it because that there's a transformation that's happening. If it's mobility, if it's moving to e-mobility, the commercial conventional capital is available for that transition, regardless of whether the driver is climate. So the driver being whatever it is, it's a transformation that's happening, and then people want to play into that transformation, which is fair. So what I feel is this time around, it's not that it's going to be any easier. It's just that there could be select areas, maybe say, for example, on one extreme, say an alternative protein industry, and another extreme e-mobility, which could benefit from a movement to wellness and, better food, health and all that, and a shift in mobility, which is anyway happening. So the conventional commercial capital may come in, whether it is driven, the agenda is driven by climate or not. So it'll be selective areas in climate which may see a boost, whereas other sectors might still still go through the same struggles as in the past. So it might be a selective breakout is my personal feeling.
Thanks, Ram. I think you built off what Satya had said. There's a mainstreaming and there's I think there's a general understanding of the importance, and there is definitely a sector-wise difference in terms of investor sentiment and that we're seeing. Last but not the least, Padma, if I can turn to you.
Thanks, Anuruti. First of all, congratulations to Impact Investors Council. I think what I hear, this has been an exceptional 2 days. So really congratulations to the team and the organizers, and thank you for having me here. As you know, Anuruti, I represent very, very early stage investors, which are angel or seed stage investors, pre-series investors, as both as an angel group as well as a very early stage fund. And what we hope we are providing is a single largest platform for seed and early stage investing. And that's where I think the real brick building starts, because that's where we start seeing the very first entrepreneurial ventures. Not only are we early stage investors, we are early investors in the ecosystem. We were the first angel network, so we've probably seen the ecosystem at least for a little more than a decade and a half. And when your question came up that what I thought and what it is, I think it's a huge journey that the ecosystem has taken. I still remember some very early clean tech, and what I would also at that time, it were known as impact opportunities, investment opportunities. I remember talking to a number of investors who say, no, these are likely to be not-for-profit organizations. I think these will be cause-based entrepreneurs, and truly and surely they were actually. Our biggest challenge at that time was to bring in the business acumen, the business thinking, help them scale. How do you look at profits? So, that change from cause to business was a big element that we faced. The world today, and specifically in India, is very different, very, very different. The very fact that in 2015 to 2020, before the pandemic hit, early stage clean tech, climate change ventures raised 67 or 68 million tells you the story, right? It's completely changed. I think what we are seeing, and I'm really delighted that this has happened, we are today seeing entrepreneurs who are not cause-based. Okay, they are driven by a passion. They've picked up a gap or a problem that needs to be solved. They've picked up an innovative solution that can be applied, which has a large market, and they've built on it. But their business, they do have the business sense. Yes, they need to be mentored and need to be polished, and I think that's part of the game for every sector or every early stage entrepreneur. But I think the cookie has moved quite a lot. I wouldn't say the icing is still there, but it's been baked to a great extent. That's number one. Number two, I think what has really changed in the last 15, 18 months, and no guess is why, but I've seen a huge difference in the sectoral split of our deal flow, right? Before, in 2019, I think our climate-related deal flow used to be about 10% with great difficulty, right? Today, we are seeing more than 20%. That's 100% increase in that deal flow, which tells you how the industry is coming about. The second big thing that I'm noticing today is when I look at deal flow, there are in this space, I think we are getting into specialization, right? So while EV mobility is big, I don't deny that, right? But now we are having to think about how do we do proteins, right? How do we look at pollution control? How do we look at water, sanitation, agri? I think that having to build what we call SMEs, which means subject matter experts, to understand those businesses, understand those innovations, understand those sectors in much more detail. So that to me is a sign of really maturing. And that has resulted in companies now, if I bundle the sectors up, in some ways, we're looking at about almost 500 million that has been invested over the last 18 months or so in this space, right? Both in early and growth stage, which is huge. The fact that we now have VCs, next round investors who are looking at this sharply, just adds to the fact that how this space has matured. And the last, perhaps the last but not the least to me, I think just as the entrepreneur's business is to build a company and create value, I think the investor's business is to invest and get returns. And one of the big factors for any sector, any investment to work is the fact that you invest and you are able to get returns. It is, yes, the entrepreneur has to work, but for investors, that's a big piece. And these are now happening. We are seeing companies within what? We at IN have seen companies within 24 months giving us 6x to 7x in terms of companies in this sector, right? We are looking at innovation in the manufacturing space, which is catering to solutions for pollution, right? We are seeing companies which are building waterless robotic solar panel cleaners, and they're just booming in how they're building their ventures. So I think there is a lot that has moved when I think back. Your question was very, it's sort of very reminiscent for me to say, and I just found myself, actually, it was very pertinent. It jerked me a bit. So I appreciate that also. I think the world has changed, but it hasn't changed 180 degrees. I think it's brought a change to a point where it's opened up much more potential. And what works, I think, which is very important for entrepreneurs and investors, I think we as a country have become a land where innovation can be experimented. If it works in one part of this country, it will work in some other part of the world. So I think it's a huge opportunity because we do have problems. We do have problems in water, sanitation, agri, all of them. But we are not alone, right, as a country. There are places around the world which have similar problems, similar issues. And I think it's a huge opportunity that we are sitting on. So all I can say is I'm enthused by the way it has grown, but I'm more excited about what it can become.
Thank you so much, Vandana. That was wonderful, and what an inspiring note on which to close the first sub-session. I think the words we really heard, there was mainstreaming, commercialization, experimentation, maturity, specialization. And I think that was really the theme that came from all five of you. As we move into the next session, which is our first open session, it'll be helpful to actually have the panelists respond to each other as well. I'm sure there's a lot that you'd all like to discuss with each other. And we'd also encourage the audience to start kind of sending their questions in the chat box. The themes that we'd like to now really talk about is funding. Everyone's thinking about it. When we did the report, the investment landscape report, nearly 90% of the entrepreneurs we spoke to talked about issues with patient capital, issues with the risk return profile, and a lot of them actually said that perhaps the nature of deep tech solutions isn't really well suited for a traditional funding pathway, right? So there were these conversations that took place. So as we move into this kind of next round of conversation, it'll be helpful to have all of you reflect from your own journeys on what are some of the innovative things around funding that you have seen happen, and perhaps what are the next steps in this direction as we keep moving forward, because it's very, very important for us to provide opportunities, Karthik, like you mentioned, for the bottom up to really start to scale. So it'll be helpful to hear from all of you, and I would love, Karthik, perhaps why don't you kick us off?
Sure, and I think to what Satya said and Padmaja said as well, right? So I think when you see a lot of entrepreneurs bringing out innovation, right, and when you need to go back and do homework because you haven't seen that before, it's when that the entrepreneurial ecosystem is maturing and that we as investors need to kind of step up our game, right? And if you look at now, I think I'm stepping a little aside because your question is more around what do we do about deep tech startups? right? And I'm thinking more around innovation, engineering, basically building something which you need to kind of do a pilot on, right? So I think the problem is, somebody came up with, the lean startup model, and now everybody is trying to fit the lean startup model into everything, right? And there are benefits to the lean startup model in terms of the work that you need to do with the customers, right? But the engineering, it can't be kind of short circuit, right? Like you can still do an MVP, but you need to kind of go through the process of building the product which you think will give you the competitive advantage, right? The problem is the patience required for the investor to get that first product right is a little missing, right? So as soon as you kind of have a sector, so great example is the EV sector, where everybody is now kind of announcing partnerships of like 1,000 auto rickshaws that are going to basically get electrified, right? So now there is suddenly a fear of missing out on that traction, and i.e. the next round of capital, right? But I think if you, as an investor, your portfolio has the right technology approach, has a competitive advantage, it's very important, especially in the early stages, to stay with it, build it through to the end, and then go out and do the smaller pilots. The cost of doing that and the timelines of doing that are about the same, right? And there are enough research from the Harvard Business School, from a lot of global foundations, including the Hoffman Foundation, which says the deep tech startups actually don't take more money. They take more time because they never get funded, right? Because traction to get like 2 marquee customers is a lot more valuable and meaningful than basically putting out 1,000 auto rickshaws that are running around with like nobody kind of really getting any feedback, right? So traction is not the same when you do deep tech, right? And I'm talking about deep tech when it comes to like infrastructure services, stuff like that, which is kind of in the realm of the clean tech space, right? And so if there is a way for investors and startups to define a new paradigm for what successes and milestones are, and be able to work with it, that would be great. But as Sam mentioned, beyond the seed and the pre-series A, there is not too much of action happening. So it doesn't matter whether you have traction or not. It's just going to be whether you're in a hot sector or not, right? So I think for us, the way we have thought about it is, one, we are training ourselves to be patient, right? And two, we are training ourselves to also, as investors, bridge that gap that I talked about, right? In terms of basically thinking big, getting the bigger capital in, and being able to deploy it faster. And so have more of a capital stack that goes from seed to say CDC, where the investors don't really care whether it's climate change or not, but they're just thinking about growth or how much cash it throws out.
Thanks. Thanks, Karthik. I think that was really interesting, especially what you had said right at the beginning, right? About we've kind of got into a mindset of what a framework and timeline is supposed to look like, and we're now force fitting everything. So super helpful. Satya, maybe I can turn to you next, and also get your reflections on what you might have seen happening in the ecosystem, which is really trying to tackle this head on, right? This issue of, because I think now it's almost known that a lot of climate tech startups do need more space. So what have you seen, and what other innovation would you think is required?
So first and foremost, there is no dearth of innovation. There is enough and more innovation happening in labs, universities, research labs. There are enough and more talented scientists all across the globe who are working on innovation. And they are very well supported so far as their, you can say the technology build-up is concerned at a lab scale. They have got enough and more capital to get that grant, to build that, what you call, file the IP and get their research paper published and all that. But most of them, if I can use the language of the technology readiness level, they are at the TRL level 4 or 5. I mean, that's where they get stuck. And what the market requires is essentially for them to really hit the market and get the revenue customers. And many a time, some of these customers are fairly large to deal with, and they require a validation of a different level. So there is a significant amount of gap between lab to market. So I think, I mean, while we can talk about patient capital, but they need more of a hand holding in the phase of taking them out from lab TRL level 3, 4, 5 to TRL level 8, 9 before they can be ready to fund it. And we have been facing this challenge not only in India but also in markets like Singapore and Asia in general. And I don't think the challenges are any different. We have spoken to a lot of our counterparts in Israel and Norway and Japan, and I think the challenges are similar. The challenge is that when these TRL level 4, 5 startup innovators, they want to seek capital, the innovator is trying to convince the commercial customer to back him or her, and the commercial customer is saying that you convince whether it's really going to work in a commercial setting. So they need a significant amount of hand holding where the techno commercial validity can happen, and this requires more of a deep tech accelerator, incubator, facilities, research, prototyping, piloting, commercial piloting, pre-commercial piloting, customer validation, a lot of things that requires a significant amount of hand holding. And if you can accelerate that, I think you may not need that long a patient capital as normally people associated deep tech venture to be, because this technology is already validated lab scale. It needs to be now scaled to a commercial pilot or a commercial setup which can be valid. So what we have done as a group, and I can share our learning out of it. And we have been facing this challenge the moment we started this in Singapore. So we had to set up a lab. We now have a physical lab. It's a deep tech, material science, biotechnology lab with all kind of reactors. I mean, you can say distillation setup and everything that you require for a material science and biotech lab to happen. And there we invite the innovators to come and say, hey, this is what you are already filed a claim on. Now, can you please validate it in front of us? Then they would, of course, require a small amount of pilot to happen, and then some more, you can say, prototyping, commercial prototyping to happen. So we essentially take them through this journey of commercial validation to the extent we can, either within our own lab or in our partner labs, whether in India, Singapore, Israel, now Australia, New Zealand. We take them through this journey as quickly as we can, while supporting them financially at the same time, connecting them to the right dots from a market linkage perspective. And as this gets validated, then your mainstream fund then steps in as an investor. And that time you may not be alone. There may be many other like-minded investors like what we have, very sizable pool of investors on this call. We all can pull in together our own risk capital and start building the ecosystem together. So this requires a kind of a lab to market approach, and that needs to be curated in almost every market. And all of us have to do our own part so that we can get a larger deal flow for the larger set of investors, as Karthik mentioned, to be brought in this ecosystem.
So Anuruddhi, if I may come in here, I think because Satya made a very good point, right? There is no dearth of innovation. Absolutely, I couldn't agree more. And I think but that's the beginning, to be honest, right? I just want to take it one step forward, if I may. I think there are two things, two steps further that would be good to understand. See, today, innovation, as I said, is happening by very focused, very high quality talent. Entrepreneurs are, I'm finding, very high quality founders, right? Yes, of course, they need help. They're doing it for the first time, right? Many of them are doing their first gen entrepreneurs. So they're not going to get it right. What we are finding is that the pools of capital for these climate investment, impact, whatever word you like, those pools of capital have really opened up. Earlier, we used to, as I mentioned earlier, we used to look at them as not-for-profits. Then we had angels coming in. Then we had impact or social funds, quote-unquote, coming in. Today, mainstream VCs are investing, right? Whether it's Series A, B, or C. We are a sector-agnostic fund, VC fund. And 20 to 22% of our investment has gone into such companies, right? So I think the pools of capital, number one, have opened up. Right through, you don't need focused VCs, sector-agnostic VCs are investing, number one point. Number 2 point, the corporate sector has opened up. If I look at the public sector units today, people like ONGC, they are investing exactly in these kind of innovations and ventures because that's aligning with their larger vision, right? However, they are not, with all respect to any of the public sector units, including ONGC, I mean, no disrespect, but they are not full-time investment professionals, right? They are basically part of the corporates. So they are actually relying on full-time investors like all of us who are sitting on this panel to invest behind that diligence, invest behind that 24/7 work. But important for the entrepreneur ecosystem is there is a big pool of capital that is opening up, and this is equity capital. No, I'm not talking right now about grant. Please park the grant piece right now. Okay, so that's the second big piece. The third big piece, which is very, very interesting. You see, earlier people were impacting, corporates were impacting, were investing in impact businesses or small SMEs where there was a social cause. And typically they were looking at it as philanthropy money being granted, right? The good side is philanthropy money is non-dilutable. But the bad side of philanthropy money is the good work stops when the good money stops. Now, what we are seeing is the corporates are investing money into these companies. And they don't need to even look at it whether it aligns with their mainline business. So I know of many companies that we have invested where people like Zoho and Zerodha have come in. Where is the connect, you would say, right? But the point is they're investing because they're trying to build sustainable businesses because these businesses will then create a larger impact in improving environment or whatever they are doing. So I think this is the third piece of pool of money that has come up. The fourth piece, which I think is very important for entrepreneurs to understand, it is not enough for any entrepreneur today to say, I am a valuation based company, right? That today I have raised money at 5 million, tomorrow I'm going to raise it at 25 million. I think the ecosystem is maturing to say what is the value you're creating in your sector or in your value system. That's becoming extremely important. And for climate tech kind of investments, this is much easier to say, I'm going to improve, I'm going to reduce pollution, I'm going to improve, agricultural productivity or whatever. So I think we are seeing a triple bottom kind of models emerge from ground up, but even through the investor perspective, fundraising perspective. And we are therefore being able to see something which is absolutely unique, where these ventures are, and we've done this. So I'm sort of speaking a little bit from my experience that we are using now our portfolio companies to push government policies to be changed, right? And this I think is huge because there is such a focus on startups. There's such a focus now, especially with the pandemic, etc., on cleanup, quote unquote. And we are being able to, we for instance, for one of our companies, we went to the Green Tribunal and we thought we were going to get the policy change for Delhi. Actually, we managed to change it for the entire country, and that opened up a market which the startup could just go and harvest the sales and the customers, right? So I think there is I would not say an unholy alliance, but there is a huge alliance where different aspects of society and government are coming together to really create not only innovative, to Satya's point, but very impactful businesses which can grow, sustain, become profitable, and create both value and valuation for all stakeholders. So I think what we are seeing is probably the beginning. As I said, to me, the excitement is what this can open up into. And the fact that we're being able to bring in these kind of different kinds of pots of money, I think it's huge. It's really huge.
Yeah. No, Padmaja, I think that was very, very helpful. I think those 4 kind of tools or frames that you mentioned were exactly right. Jasjeet, I'd love to turn to you now to speak about both your experience in India as well as in the US. There's an audience question that's actually come in, which I'll kind of add on to anything on funding, which is a question has come in saying thoughts on an impact first, profit second approach versus both impact and profit on the same pedestal. And I'm wondering how you think of, kind of what has happened around funding in that context as well. So it'd be great to hear from you now.
Absolutely, it's my pleasure. And, I'll try and build on some of the points that our colleagues have made over out here, but starting with the last point that Padmaja just made right now. In a certain sense, this feels like a second coming. Almost exactly a decade back, we were the landing party that set up Umedyar network in India, and that, was part of the revolution, the impact investment revolution that we have here right now. A well-matured field, a decade later, investments, of the scale of $1 billion a year. Karthik was a part of Acumen at that time. Umedyar, I mentioned, a number of our colleagues were here, a part of that. And that's evolved itself to a developed sector. And I dare say in 2030, if we were to sit down and have a similar conversation, we might find climate broadly and climate tech as a portion within it to have matured not just to that level, but significantly more than that, because the scale of the problem that exists in front of us and the solutions that are required are much, much larger. This is a giant pivot in terms of energy, in terms of life, etc. So a couple of points I try to make. The first is that, what I'd like to introduce to your audience is that the general taxonomy around opportunities is much broader than one might think of. And while it's great to have sort of this organic buildup of fundamental breakthroughs taking place at labs at IIT Delhi over my shoulder here, or other leading scientific institutions in India and corporate R&D labs, etc., that would be fabulous to have, and it's absolutely needed. But there are several hotspots around the world where a lot of work is taking place. And India has always had a very important part in the global value chain for any innovations in terms of making them ready for the global mass market, right? And in impact, India stands as an exemplar for the global mass market, whether it's in Sub-Saharan Africa, in Southeast Asia, in Latin America, and so forth. And much the same applies to climate tech, and broadly looking at sustainability as a field. And when you open your lens up to that, that answers part of your question about US and India, and why just US, Western Europe, East Asia, etc. So there's a fair amount of what we call in Hindi Adan Pradan, a lot of exchange taking place between important geographies around the world. And while it'd be terrific for us, and Karthik is very much involved in building up a completely domestic stack in many of the companies that are funded out here, there are other sources for technologies, for resources, etc. An allied point along with that is that a number of enablers for such companies have really come of age. And by that, I mean technology enablers, data analytics, various software tools, connectivity with different sources of innovation, different ways to accelerate progress. All of that's changed a lot from kind of the last climate tech boom at that time, the clean tech boom of 2008 and 2009. And a number of us kind of look at that and say, how can we make sure that we've learned from those mistakes and we actually build much better this time, especially since now it's a planet level critical problem. And there are a number of capabilities that have been built up both in India and around the world that help the general climate tech ecosystem. But it does come down to the point that was made earlier that there is a fundamental expertise that's required in climate tech that might be at a higher level than many other impact subsectors that we're familiar with. Perhaps health is an honorable exception because of the deep dive you have to do in areas like pharma. But climate tech does require and benefits from having a fundamental understanding, or at least having a lack of uncomfortableness with technology. An example that I would use, and I'll use this as a second major part of my comment out here, and then yield time to the rest of the panel and questions you have, is using the example of an exemplar, a lighthouse investment that we have in the impact space called D-Light. And D-Light, as you know, is a leading solar lighting company, standalone solar lighting company in the world. And our opportunity to invest in it at Umidya really came looking at the impact, but also very rigorously looking at the profit potential, income generating potential, and climate potential. And this is, I'm rewinding us all the way back to 2010 and 2012. And the funds that, now, folks you had yesterday, Total was a part of enabling that company. Karthik at Acumen was a part of it. At Umidya, we led the early series of fundings out there. And those fundings were equity fundings to build a product. It wasn't hard tech as you'd understand it, but it required a lot of localization, an immense amount of localization and global supply chains that Total helped out a lot with. And the equity funds that were raised then build themselves on to then start, as the company grew in success, to start attracting grant capital and then to start attracting debt capital to the point that we are at right now. And I'll apologize because my numbers aren't going to be precise, but D-Light's raised roughly $200 million to date. And at this point, that capital stack is roughly broken out a third apiece in equity, in grant, and in debt. And that's happened over a period of time. So all these different capital instruments have a role to play at a certain time and at a certain place. The outcomes from an investment like D-Light have been fabulous. The company itself and its products touch about 2% of the world's population every day. And as a company producing these products, D-Light products have abated more CO2 equivalent than is generated by a country like Kenya or a country like Sri Lanka every year. So now we're talking about planet level scale impact that's taken place, both in terms of what we would traditionally understand impact to be, reaching to people, providing better outcomes in terms of education or livelihoods, etc., but also having a second set of climate goals that the company has been spectacularly successful at. And as an investment for everyone in that capital stack, it's been a rewarding investment. So it's probably a great example of a combination of some of those factors. I'll stop there and happy to take more questions on it. And I know that all the panelists have terrific experience from having been involved in this field for the better part of the last decade.
Thanks. Thanks so much, Joseph. Shyam, maybe we'll turn to you and would love to get your thoughts with BIF on this.
On which specific part?
Yes, that would be great.
No, on which area?
I think we were talking about the funding and patient capital, and therefore what are the models we might have seen? Yeah.
See, the tricky thing is exactly what Karthik was saying. If you're trying to do deep tech in clean tech, as it is, clean tech takes time. Then you're talking deep tech and clean tech. That takes serious time. But you're talking about things that are disruptive, really disruptive. And those things should take time. Honestly, I'd be worried if these things happened overnight. So it does need to take time. So the thing is to find capital that will support it. So the VC world is trying to figure it out. VC world is still not yet figured out the right model to do deep tech. Forget in climate, even in the non-climate sectors where there is momentum capital, even there deep tech is still fighting to find its place in a proper VC world. It's not easy. So even there, the deep tech investments tend to be again very software led. It is not hard tech or hardware led. It is still software led in deep tech, even in non-climate areas. So in that sense, if you think of it, so you've got two battles here. You've got the climate battle and you've got a hardware battle if there is a strong hardware component to this. But what we have found very interesting is in Bharat Innovation Fund, we've done a lot of software deep tech. We've done advanced biotech deep tech. We have companies that are doing things like immuno-oncology. And we've got companies which are doing computer vision and stuff around industrial AI. Again, there is a very strong software component to it, but there is some hardware component as well. And there is capital available. There is time that it takes, but the capital availability is getting better. Now on climate, what I'm finding very interesting in the last 6 months or so is that we've had inbound interest now from some of the DFIs and other investors who are trying to find a middle path and find a way to support these companies until they can come in and do direct investments. So they're all looking to do 30 million, 40 million, 50 million and beyond checks. Someone needs to still do the pre-series A, series A, series B, which is the first 1 to 10 million. And that's still the gap in the market. And I think there is bigger recognition now that without that capital and that's early support, the late stage guys have nothing to invest in. And they can all claim whatever green infrastructure carve out they want, from their LPs who give them really massive quantums of capital. But you need a pipeline and you need a serious pipeline if you then got to invest 50 million to 100 million per company. And that serious pipeline building calls for a lot more capital in pre-series A, series B, and a lot more patient capital there. I think at least there is a grudging acceptance now that is needed. Whether it actually translates into capital flowing into dedicated funds for climate in India, I still don't know. I mean, I hope it happens for the sake of the ecosystem. But in my mind, it still remains to be seen.
Thank you. Thanks, Shyam. So we're running woefully short of time, and we'd got a whole other kind of sub-session planned. And so I'll request the panelists actually if we can do a sprint version of that. And so if everyone would be okay just spending maybe 30 seconds talking about the one big thing they wish for the ecosystem. And I think that'll be just the right note to close this out on. Satya, would love to start with you. Maybe just 30 seconds on one big thing you want for the ecosystem.
I think more early stage support for innovators to help them to come to the market.
That's perfect. Karthik?
I would borrow from Satya and then I'll add, I think, more innovation investing capabilities on the LP side, especially the ones who are doing climate, and then a lot of the innovation investors starting to look at climate, right? So we have great foundations that work with us that are kind of have done innovation investing in early stage innovation support. I think those stepping into the climate space will make a big difference because I think there's a lot of learning to be had around doing deep tech stage support.
Thank you. Jasjeet, over to you.
I'd say more, just building on my comments, more via mediation, both for the capital that's looking to enter India, and that's not the global climate equation doesn't solve if India doesn't solve. But similarly, India doesn't solve unless global expertise, global capital, global technology comes into India. So enabling that via media, which is sort of the role that a few of us play, is critical in that sense, so that what we do out here is not isolated, but it sits in a larger global context.
Got it. Padmaja, can I ask you to go next?
Yes, sure. I think two pieces. I agree with what my previous colleague said. I think one is debt, to open up debt, because as you grow these companies for a longer runway, they need money, and I think diluting is not such a great idea all the time. So some way of some debt products, working capital products. Second, I think, we have an interesting situation. We have companies that need handholding and mentoring. And because of the impact that these innovative products can have on the ecosystem, on the environment, there are a group of mentors who are available. But to get that engagement done, to see value from each other, right, I think that's what's needed. And for me, that translates into one piece which I really wish can be sorted, is how do you get ESOPs to mentors? I think that will really, really help non-exec directors, independent directors, mentors to get ESOP, because that's a pool of experience, deep pool of experience on the one hand, and entrepreneurs who really need it We need that bridge, and that's the stickiness that we need.
Got it. So, debt and ESOPs from you. Sham, it'll be great to kind of close out with you and your thoughts.
Personally, I'd want to see Indian institutional investor participation in climate tech. Indian institutions, I'm talking about not governments, and I'm not talking about DFI types from international. I'm talking about corporates and asset managers in India saying that this is actually important. And yes, it may take 10 years for these companies to really blow up and become big, or 10 or 15 years, but it's okay. We will invest capital because this is a space that will yield good returns in the long run, and it's needed for the country for both purposes together. So, I mean, that Indian actual investor commitment to the cause, which is abysmal at this point. I want to see some of that actually come through from proper asset managers and corporates. Not talking governments or grants or any of that. The real asset managers putting money where if this is important, it should matter to them as well.
Yeah. Okay, so that was that was a great wrap up for the session. I think we've heard a lot of excitement, but there's also a sense of responsibility about how much there is to move from where we are now to where we really need to be. I'd like to thank all our panelists for joining, and for the audience today as well. And let's wrap it up and move to the next one. Thank you so much, everyone. Thank you for coming.
Thank you. Thanks.
Thank you, Anuradha, for a fabulous moderation, and all the panelists. This was indeed an insightful and energetic discussion. Quite inspiring to hear leaders share a positive vibe around climate efforts. And as Satya said, we are reaching a tipping point where climate is becoming mainstream, and we won't be surprised to see the next set of billionaires coming from this space. I couldn't have put it better than Padmaja. The cookie is indeed, it has baked.